So one of the benefit of being a systematic trader is you have something to compare yourself or something to benchmark yourself to. A lot of people will benchmark themselves to an index like the S&P 500 or the Russell. And although that's fine, I think that makes perfect sense. For me, I want to benchmark myself to what my systems are doing. And I want to learn from my systems, even though I'm the one that built them, potentially which ones are working well in this environment, what I think potentially could work better in the next environment. So as we end the quarter, what I'm going to start doing at the end of each quarter is before I update the website, which I have to do, where we have all of this information spelled out completely transparently and openly so you can check it anytime you want, is just go through with you guys what worked and what didn't work this month when it came to the StatsEdge Pro system. So everything I'm going to show you, again, if you go to StatsEdgeTrading.com, you're going to be able to get all of these systems for kind of one price, and you can go and look for whichever one of these interests you, if not all of them don't. Some of them may interest you, some of them may not. But again, you can see the back test of all the systems. And then again, the detailed statistics here. You click on that, that will bring up these reports that I'm going to show you guys once I'm able to get them updated. So we run 3 major styles, and then within each style, there is a number of systems. Now, when backtesting, we kind of assume equal weight so that you're taking, say you have a $100,000 portfolio, maybe 30,000 allocated to this, 30,000 to this, and then within each system, you're kind of equally allocating to each particular idea. So maybe you have 5,000 for each potential trade that would come through or something like that. We've also tested, using a constant risk of like 0.5% per trade, and they work about similarly. So because they're so similar, for the simplicity of it, I want to take a look at just one of those styles, which is the easiest one, which is just kind of dividing your portfolio. For now, as I build more systems and it gets more complicated, that might be something that changes in the near future. So we have swing trading, which are weekly holds. We are kind of opening up, we're trading for a week, we're closing a week after. We have day trading, and then we have investing. Now, let's go through all of those and just kind of get a good idea too of where we are in the overall market. Just in case somebody has missed it, we are in a raging bull market as I'm recording this. We are making another new all-time high. So the positive returns shouldn't really surprise you for, say, the investing systems, but the swing trading, the day trading, where you're a little bit more active, it's a little bit less dependent on the overall market. So first of all, let's start in the investing system. And we essentially have 3 systems. We have an RS rotate, which is looking for just relatively strong names. RSI rotation, which is looking for, based off of RSI, kind of strong names that correspond there with a lot of kind of caveats there. And then a momentum system. And this momentum system can trigger sometimes, but not always. So if we are saving money for a momentum system, it means that through this period of time for these systems, we're actually holding a lot of cash. And I like that I'm holding roughly 1/3 in most months in cash. And then if we get a couple triggers in the momentum system, then great, we'll take those. Because sitting that much in cash makes me feel good about if there is some sort of kind of crash or calamitous event. To be honest, it might be a time that I step in, override the system, and then move that cash into indexes or something like that. And that's something I'm experimenting with, again, as I build out more investment systems. So this wasn't really meant to be a video of roadmap in the future, but I'll probably go over that as well. I'm looking to build systems that kind of take maybe some of this money when it's not being utilized, and then do some things with the S&P 500 where we take trades at certain times based off kind of what we see with dip buys and things like that. So if we kind of zoom in, we look at the last 3 months, which I have a spreadsheet to summarize this, so it'd be kind of easy. We had 10% and then 1% and then 4% on top of that. So positive all 3 months. A lot of the holdings, a lot of the carrying of this came from Mag 7 names, which we are in, generally speaking, 5 of them, as long as they remain strong. But what I really want to check up on is that all of these names seem to be uncorrelated, and they continue to be. I always look at the uncorrelated part of the drawdown section just to make sure these numbers aren't ticking up too high, because I want to make sure these things, and a 0.17, obviously a 1 is a perfect correlation, a 0 is absolutely no correlation, and for long only systems to be only weakly correlated to the other, That makes perfect sense. And then again, you can look at the graph. I've zoomed in these back tests so they only include the first 10 years. And we are at new equity highs as of last month for this. So that's great. Again, a little bit of a dip earlier in the year, quite a bit of a dip because of what was going on with this being a long only investment system and the tariff tantrum and all that. We were able to recover there. And, you know, 2 of the 3 systems are at all-time highs. One of them not quite yet. So we have that RS rotate. That one's working out again for the investment systems. Now, if we go over to swing trading systems, we zoom in there. We have a 5% and then pretty much a flat month. So August wasn't really a great month for both these systems. And then a nice strong September with about a 5% as well. So in the backtest, we are including some slippage and some commissions. But of course, you know, when we're going in here, we're making some changes back or forth, which is why I mentioned the benchmark thing here, because I like the fact in which I'm able to kind of look at this and compare my own performance and see, did I do a little bit better? Did I do a little bit worse? And how am I doing versus this? Because if I didn't do any better, then I should have just done exactly what the system did. And the max drawdown so far this year on a monthly basis, it's obviously changed intra-month as well, is great as well. Then we go into the correlation sector, and this is working well. So we have momentum not being very correlated with pullback, and actually negative correlated with pullback, and then so with the MR weekly, and then vice versa for a lot of these. There's not a lot of huge correlations going on here, which is great. And then you can see again the equity curves down below. This shaded area is the combined equity curves, and then each of these lines are the individual equity curves. Our mean reversion strategy, you can see here, has been pretty much flat for most of the year. Made us a little bit of money when the market was kind of crashing there, but the mean reversion strategy remains mostly flat. It is our momentum strategy that's been doing well, and then our pullback strategy has been carrying most of the weight here. You can see it mostly does that, but it has years where it doesn't do anything. That's why we're trying to short up with different strategies. So mean reversion does well in certain markets, right? 2021 was great, and then, you know, it kind of holds us back for the rest. But that's something that I will take all the time, just because I'd rather have this as part of my portfolio for when it does kick off, when momentum and pullbacks are kind of lagging behind. So that's why that exists. But again, part of this review, I'm doing it with you, but this is also a review that I do for myself. I say, okay, you know, is there anything, if there's anywhere that I'm going to focus on the swing side of things, and I actually have, because it's off screen, but I have my iPad here with my little pencil, and I'm making notes, is, okay, what can I do potentially on the mean reversion side? Maybe come up with a new mean reversion system, maybe tweak some filters or changes in the current mean reversion system. You don't want to do that too much. You don't want to do that like every day, because then you're just kind of curve fitting. But every 3 months, it's good to sit down and say, right, is there anything that I can do here to make the mean reversion setup just work a little bit better? And then go through and start doing that study and test. And that ends up being like a month-long project and what you can do there. But again, it's important to do this. A lot of people don't even record their own trades, let alone have a benchmark to kind of go against. Lastly, the day trades. So there's going to be one caveat here. We had a 10% in July, we had a negative 5% in August, and we had a 35% in September. Now, one big thing to note here, just full disclosure, is QMMM was a big one here, and it made up most of the gains in this particular system. So if you missed that trade, you gave up most of the gains for this particular month. So that's why, again, you want to look at these and you want to use them as a benchmark, and you say, what could I do potentially to catch QMMM when it happens next time? Because those who don't know, I can just Google QMMM. I don't have a charting platform open here on this, but this is one of those. It went from, we bought it at $7 and then it ripped to like $200 by the end of the day. Again, critiquing myself and critiquing my systems, because that's how we get better as traders. I bailed out of this a little bit early. I still had a great gain on it. I'm not complaining about that at all, and I'm not complaining about the day trading systems for this particular month, but I could have done better if I had just done nothing. If I had closed the account and walked away and got filled at the end of the day the way everyone else did, that would have been amazing. I would have made way more than I would have if I had just kind of killed, quickly. Now, the guys in the room know that was a high 5-figure day, and it was a great day. So I'm again not complaining about that, but just looking back and saying, well, my day trading return is going to be significantly lower than this for this quarter because I bailed a little bit early on that trade. So then looking at the correlations, you can see everything is very light, which means a low correlation to, in some cases, a negative correlation across these four strategies, which is great. And then we can take a look. You can tell which of these QMMM came from and pop this up. Now, in the future, when I'm backtesting, I'll actually probably remove that symbol because I don't want it to skew the results when I'm doing things like optimization. But these are doing great. And what I do notice is that these two lines, which are the two shorts, are not working for us. The long setups are working much, much better, and the two shorts are not. And so the question I have to ask myself is, am I okay with that? And the answer is just right away, yes, because it's really hard to see in the zoomed in chart. But the whole point of this particular setup and having these longs and shorts is that, yes, the shorts will have a bad time sometime. Every now and then you'll have a big gap up or some move in the market, and the market will just tank down, and you can make a big gain on the shorts. But again, that's something I'll evaluate. I'll take a look at it, and I'll see how much are these shorts weighing on us. And then, is there any kind of changes or anything different that I can do from there? Like if I go up to the individual strategies and look at the short side of things, right? This particular short strategy averages 12% year over year. And this particular short strategy does 11% year over year. So just looking at that on the broader numbers, I should definitely keep them. But it's just important to note, important to look that over the last probably 2-3 months, implementing these shorts have definitely been a drag on the whole system, which is why we look at the system as a whole instead of just looking at the individual names, because the point is that they all move together. So totals here, let's take a look here. If I do this, does that make that? That is the magnifier in Windows. So you can see I'm all befuddled because I'm over here in Windows as opposed to Mac. Okay, we'll just leave that there. I'll read them out to you. I can't make that any bigger. Anyway, so what we're looking at here is just a chart of the investment systems, the day trading systems, and the swing trading systems. And the idea is, there we go, is right, this investment system, this is what we saw each month, and then the swing trading systems, and then the day trading systems. These are the totals. So if you sum up the percentage from the investment systems over the last 3 months, it was about 16.5%. The swing trading systems about 10%, and then the day trading systems about 38%. Again, heavily weighted to that one QMMM trade. And then the average, if you kind of split your account across all three systems, would be a 22% overall gain. Now, this is amazing. I'll take it all day, considering that when one system was working, the other one wasn't. But what do I want to kind of glean from this is I'm going to go and heavily study, I think, August and what happened in the market in August and why did all the systems potentially struggle in August and what could I do to shore that up. I already have notes for, looking at the short side of the day trading systems and see if there's anything that could be potentially going on with those systems, and then the MR system as well. And part of this is just to show you this is what we do. A lot of people, when I talk about how I'm a quant trader and how the system tells me what to trade. You go to our Discord, it says, hey, trade this, 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 and this. So what do you do? What do I do? Well, this kind of stuff, this high level stuff is what you spend a lot of your time as a quant doing. And whether you're a quantitative trader or a systematic trader, or whether you're a discretionary trader, I highly recommend you doing these things, because otherwise, how do you know what's working and what's not, what you can improve upon, what's falling behind, things like this. So focus dramatically on what's going on there on these your individual systems. Now, if you are just someone who's, drawing lines on a chart and then buying something as it happens, and you don't have this quantitative framework, that's why when I suggest you come over to StatsEdgeTrading.com and just give us a shot, because again, you have a framework you will get alerted each week for swing trades, each month for investment systems, each day for day trading systems. And this is what will happen. And I'm not hiding, right? You saw negative months. You saw months that are just about flat. I'm telling you that the really good return was really, really weighted to that one system. So if we lower that, we're talking about, 10, 15% across the 3 months. If you just miss that trade entirely, and that's fine. And it keeps you thinking high level, because I know what I'm going to trade tomorrow. It's going to be whatever my system tells me to trade. I don't need to think about that. What I'm looking to do is I'm looking to think about what the next system is going to be, what the next currency or cryptocurrency or whatever that I could potentially build systems on and trade. And I think high level Whereas the robot and the systems and the Discord just saying, buy this, sell this, that thing's really low level for me. And then I just follow it as I happen. So I hope you guys appreciate this transparency of just opening the books. And this is kind of what happened this particular month, or sorry, this particular quarter for Stats Edge. And if you want more of this content, make sure you're liking and commenting and subscribing wherever it is that you're seeing this video, and you'll get more of it. And please go to StatsEdgeTrading.com, check us out there, sign up for the free email list, because I'll email you this. The email that will come with this particular video will have these different charts for the different systems and little explainers of what we're doing, things that I could improve going on. But aside from all of that, for your own trading, make sure you have a system of review, a system of going through your trades, what worked, what didn't, so you can very simply do hopefully more of what worked, less of what didn't, and continue to move on into the future as a trader. Until I talk to you guys next time.